It seems that we continue to see this tug of war with central banks. How much are we really starting to see the sort of breaking points in different markets, whether it's the UK gilt space or the liquidity issues with the Treasury space or just a dysfunction in the JGB markets as well?
Yeah, I mean, I think obviously starting in the UK is the most obvious place right now where things are broken. And, you know, the central banks all of a sudden have got this conflict between, you know, their role as lender of last resort and, of course, their inflation target. And it's going to be very interesting to see how the Bank of England gets through that in the next couple of weeks. And you got to think that it's going to need some pretty serious hiking in rates at the front end of the curve to try and reassert their inflation fighting credibility, while at the same time providing liquidity at the long end of the curve to as lender of last resort.
We heard from Governor Bailey, though, that he would be ending the BOE support this Friday, and we had the pound plunging. Given what's happening in the broader macro space with the pressures on the pound, on the euro, and all of the other currency trades against the U.S. dollar, can we just expect this overshoot and strengthening of the greenback to continue?
Yeah, well, I mean, look, the first thing I would say is I absolutely agree it's an overshoot. You know, by our metrics, we have the dollar as already more than 20% overvalued on an index basis, and sterling and the yen are even more extreme than that. And I did think it was interesting hearing the comments from Villeroy earlier on about the need or the potential, I suppose, for coordinated intervention. I don't actually think we're there yet, because the US themselves still need to tighten financial conditions, so a strong dollar is still in their interest. But it wouldn't surprise me in the next sort of 3 to 6 months that we're in a position where actually a stronger dollar isn't in anyone's interest across the G7, and we're looking at bookings at the Plaza Hotel again. But I don't think we're there yet. But I think the dollar overshoot, and the other interesting part, of course, is that in Europe in particular, and Japan, the weaker domestic currencies are making the inflation situation quite a bit worse, and so it's a real challenge for everyone at the moment, the strong dollar.
Quite interesting, we've gone from no way to another Plaza Accord to maybe something like Plaza adjacent for the current circumstances. Michael, when you take a look at the potential dysfunction when it comes to bond markets, starting with treasuries, where do you see potential contagion? Is that the biggest risk at the moment?
Yeah, I think it absolutely is, because the one thing that we've learned from the UK situation is that in the past decade, fixed income markets have been quite happy to give governments a pass on their fiscal spending, and of course at the time the economic environment supported that. Now we're in a world of quantitative tightening, low growth, and high inflation. Fixed income markets are looking much more closely at fiscal policy, and the lesson from the UK really is that the gilt market was just simply nowhere near as liquid as we thought it was, and there are obviously open questions now about whether that would also be the case in the Treasury market, and there have been liquidity concerns, particularly at the long end of the curve in the Treasury market itself as well. But look, the one, again, taking the lesson from what the Bank of England have subsequently done, is that we do know that central banks still have, that mandate as, for financial stability is a really important part of their mandates, as well as inflation fighting. So, that the Fed will be there if there are any dislocations, but I think it's something that it's just a new risk over and above the macro risks that we've been trying to price in, that fixed income markets might just be a little bit less liquid than we're hoping.
Michael, I like that you say you have high conviction in the sense that you have limited conviction. So is it just a sense of riding out the storm?
Yes.
Are there opportunities? Could we see an upside surprise? Maybe from China, maybe after Party Congress, things could perhaps change significantly.
Yeah, I mean, look, in another week, or in another environment, China's Party Congress would be the main thing that we were talking about, and their potential to, they would seem to have a lot more room than other economies to re-stimulate, and that could really kind of, put a floor in commodity markets and maybe even put a floor in risk appetite. But I think right now, to your question about do we have any really high conviction trades right now, it's very difficult to have high conviction. Your comment earlier from Loretta Mester, that they don't know where the peak in rates is, because they don't know what level of rates will slow the slow the inflation rate, which obviously is their primary target. So I think that's why you still to ride it out. You stick in the US, you stick in dollars, and that's why, of course, the dollar is overshooting at the moment, simply because we don't have the conviction. But I think you're right. I think China is certainly a potential place for a positive upside surprise post the Party Congress.
And if you kind of still treat as the yuan as an EM Asia anchor, if you will, could we start to see opportunities for emerging market FX, particularly if we believe that this is not the Asian financial crisis, this is not taper tantrum?
Well, look, I mean, it's a really interesting point, because fundamentally, EM economies are actually, they're almost through their tightening. So in many cases, in some cases, obviously, like Bank of Korea, that we're still going, but in a lot of places, we're almost through the tightening cycle. There's clear value in EM currencies, and they're significantly underowned as well. And so there will be a huge opportunity there at some point. I think we just need to get through. Or get more confidence in where we think the peak in rates are for investors to want to go back in. But but I say at the moment, everyone's hesitant. But there will be opportunity. That's the one good thing looking forward, is that this crisis has thrown FX valuations out significantly in particular, and the opportunities I think will primarily be in EM once it begins to turn.